Alright, hello and welcome. This is Singh doing yet another session on behalf of BullBinary. Welcome everyone. It's afternoon my time. I hope you guys have had a good day. Alright, I can see quite a few people here, which is good. Okay. And please make sure that if you have any questions, please type them in the chat box. I'll be more than happy to answer. Alright, once again, this presentation is being done by Singh on behalf of BullBinary. A bit of a disclaimer before we start this. This information presented here is provided by a third party, not BullBinary, for information purposes only, and does not constitute investment advice. Trading binary options is highly speculative and carries a high level of risk. You may sustain a loss of or part of your invested capital. Therefore, do not speculate with the capital that you cannot afford to lose. BullBinary is a brand name owned and operated by Spot Capital Markets Limited, a Cyprus investment firm licensed and authorized by Cyprus Securities and Exchange Commission, commonly known as CISEC, under license number 210/13. Spot Capital Markets Limited is located at Kanika Business Center, 319 28 October Street, 2nd floor, Limassol, 3105 Cyprus. All right, so I welcome everyone again. I hope we are just continuing our webinar series from last time. So our last couple of webinars have been support and resistances and trend lines, and people have found them very useful. I have had quite a good response according to that. So I'm going to give you just a brief overview of our last webinar, then we will jump on to today's webinar. So just let me log on to my charts, and I'll show you what exactly we have been doing and what exactly we will be doing. Okay, let it load up. All right, for those who are new, I use TradingView. I don't use MT4s and all that stuff. All right. So first of all, I'm just going to give a brief overview of what we did last time. I believe I can see some of the names that were here last time, so it will be a good recap. Okay. So first of all, I recommended everyone that please, whenever you trade binary options, do not trade. Try to avoid turbo trading, because it kind of plays with your emotions quite a lot, and it will be much better. It will be much easier for you guys to trade higher, longer term options. For example, the longer expiry option, that will be M15 or M30 or anything like that. So last time I explained how indicators work, so I'm just going to give you a brief overview again. So I've seen that many people, let me insert one of the indicators. For example, the RSI, right? I've seen that many people, they have absolutely no idea how to trade, and all they do is they just wait for the RSI to go up, and whenever it reaches up, they go for a put, and whenever it comes down, they go for a call. And what else they do is they insert another indicator, for example, the stochastic, very commonly known indicator. So what they do is, whenever this RSI comes down and the stochastic is come down, I'm going to go for a put. I mean, this doesn't work enough. Okay. The reasons. Okay. Let me go to the settings of RSI. Now see, this is the settings. Now you see what RSI does is, it asks you the length. Now what is this length? This length is the number of candles. For example, if I turn to 7, you see the change of the shape. See, it has become much more responsive than what it was at 14. Let me go back to 14 again. See, the 14 one has a lot less curves, and 7 one has a lot and quite a few more number of curves and edges, which shows that it is more responsive to 7 and than what it is to 14. The reason being, And the reason being, all RSI does is it just calculates an average value of the past 7 candles and show you how strong is the current candle. That's all it does. It has nothing to do that the price, it has nothing to do that if it goes up then the price will come down. For example, let me show you a few fake outs. For example, you see over here, it went down quite quickly, and if you did even a 2 candle put, you see you would have lost it. Now again, 2 candle put, this might have been a winner. Again, the idea is that it is still going up. Right over here, if you did a 2 candle put, 1 candle went down and the second candle went up again. So all these are fake outs. Okay, this is not how RSIs should be used. In fact, I personally trade without using any indicator, and that's what I stress on. For example, what I do is you go on a higher time frame, say M30 or even M15, and what you do is you mark out your support and resistance. For example, you say this is a support, and then you have this is a support, and then you have this as a support, and this one as well. Maybe somewhere in between over here, say this. All right. So you see, it's a very, very simple scenario, very simple stuff. For example, you see, whenever the price came all the way down, where did it hold? It held at your latest support. Now, once this was a resistance, and once it broke, a support becomes a resistance, right? So it's very, very simple. Don't worry about the labels. Actually, let me just get them off. This is what I teach the whole day. So I have so many methods and strategies to do it. Let me get rid of all of this. It seems much better and neater like this, right? Okay, one more to go. Okay, awesome. So here we are. So this is one. Now you know that, and these are the supports and resistances. This is where these are what are being supported. These are what are being done. This is what the price follows. So that is something that is really, really good. So now, keeping it very simple and very easy. For example, if I want a good win rate, what I'll do is, all I will do is I just add another indicator again. For example, the stochastics one. Okay, so if I add this stochastics one, you will realize that it gives you a much better response if you use the stochastic as well in relation with your price action and support and resistance. All right, have a look here. Now you see the price was coming down and your RSI and your stochastic was going up. So this is where you know that yes, this was a previous support. The price has done a very long rally to the downside, and it is still waiting for a relief rally, right? See, this is the relief rally. This is the relief. Now, depending on which trend it is on, if it's an uptrend, then the downtrend will be a relief rally. If it's a downtrend, then an uptrend will be a relief rally. For example, if I just consider this bit, okay? If I just consider this bit, now you see this is a downtrend. So any small little uptrend, that will be a relief, or what you call a retracement. Okay. If it's an uptrend, for example, this is an uptrend, then this small little downtrend, these are relief rallies. So you will get much better results following with the trend other than going against the trend. You see, if this is the trend, you see the candles on the candles which are on the counter trend side are very less and very small compared to the candles which are in the trend. You see the green candles are so big and there are so many, and the red candles are so small. Okay, so and they're very few. So this is a very good and easy way to realize that yes, this is a support and this is the trend and this is what the price is doing. In the same way, you see, once the price broke, you see what it did. It broke and it came back. It retested the same support, and now what happens? The support becomes resistance, and then you go for a call. Again, now you see this is a candlestick reversal pattern. Again, you go for a call. See, it broke. Now, where will be the next time I'll do a call? Whenever the price comes down here, I will see if one is I'll wait for the candle to finish on the line. If it finishes, I'll go for a call again. All right. This is a very, very simple way to do it. What else you can do is you can add trend lines as well. Now this my first session was covered all by support and resistances. Now the second one we did was highly useful on trend lines. For example, now you see this is a very good trend line. Then I have this, then I have this, then I have this, right? So now I'm also going to draw my support and resistances. See, I'm drawing the same ones over again. Alright. Now you see, now I'm going to find a combination of support and resistance. For example, now you see this was a trend line coming here, the red one. And I also have this red one trend line coming here. So I have a combination of a trend line, a support, and a resistance. So you see, this is a very good spot to sell. Now I also see is my stochastic on the upside as well. Okay, so my stochastic is on the very oversold, overbought condition as well. So this is where I can expect a reversal. Where does it come back? It come back to your recent support, and that's where you go call again. So this is where you can do a call and a put on both sides. Okay, so looks very easy. Again, it's all about your mindset. And one key factor and another very important factor is how you manage your money. All right, so now I've given you a couple of very basic strategies. However, there are advanced courses that we do, and that's where we teach where these lines are gonna break. Much highly advanced stuff there. We include harmonics and everything to get a much better win rate. So as of now, if we just consider this very basic newbie stuff, so this is what you guys should be doing. And in order to get much better results, let's have a look at money management. All right. Now, money management. Oops. All right. Now let me actually increase the format size because I don't think everyone will be able to see. Okay, this is much better. Money management. All right. So for example, now we recommend to have at least a $500 balance to start off with. I know some of you might be having more, some of you might be having less, but 500 is considered as a good trading startup account. Even 1,000. So for example, let's take a round number. It will be easier to talk. So let's take that we have a target. Our initial deposit equals to $1,000. All right. So there are a few rules that I figured out, and trust me, trading is less about the strategies you use. Trading is much more about the psychological aspect behind it. All right. So a lot depends on how you use this $1,000, and doesn't matter whichever methods you use or whichever strategies you use. It's much more important on how you manage your money, how you manage your win rate. And trust me on this, no one can actually get 100% win rate. It's almost next to impossible. But what you can do is that even if you are able to get, the idea is that even if you are able to get 50% win rate, technically this is the win rate required to break even. Does anyone have any idea what is the win rate required to break even? Trust me, this webinar is going to be very good, and it's going to help you a lot, that even if you don't have a very high win rate, you can still make money out of value options. Trust me on this one. Anyone has any idea what is the win rate? What is the break-even win rate that is required? For example, I say I may not win 90%. Even if I win like 50-60%, I can still kind of break even, that I won't lose money. Oh, let me give it to you. 56% is the win rate required at an average of 70% payout, not payout. All right. So you see, this is the win rate required, 56%. That means on an average, let's round it up to 60. All right. On an average, if you win 6 out of every 10 trades, That is, if you win 6 out of every 10 trades, you will be making money. Will not be much, I can completely understand that, but as of now, the kind of things that I come across on the internet, on Facebook and all that, all people do is they can win 6 7 trades, and that's not a big deal. But one is they don't know how to manage their money, and even if they do win 6 7 trades, they cannot do it consistently, which is a problem. They'll have one day when they will make say 8 out of 10, and the next day they'll win 2 out of 10. So that kind of really screws everything up. So what we're gonna do is, as I said, and the target is that you need to win 6 trades out of every 10 trades, and the idea is do it consistently. Consistency, discipline. For example, if you have a set of rules, just like the couple I explained to you, that I am only and only going to trade whenever I see that I have 2 trend lines and a support line and one of my indicators in place, and that is all what I am going to trade. Otherwise, I am not going to trade at all. Alright, for example, if this is your rule, then stick to your rules, even if you may find only 5 trades in the whole day, but you will be making money. Alright, so this is very, very important. Now again, as we just a recap, one is we need at least 56% to break even, 60% to make a bit of money, not too much, but a bit of money, on an average of 70% payout on your broker. And BullBinary easily gives you 70% payout, so that's not a big deal. So that is, if you win 6 out of every 10 trades, you'll be making money. And the next important thing is consistency, discipline. All right. Now we've got that out of the way. Now, as I said, the initial deposit. All right. If we have an initial deposit of $1,000, let's see how much money can we make. All right. I actually had a calculator. Let me actually find it. It will show you that what will you be making. Hold on. Let me find it out. It's very, very, it's a very important one. It just calculates how much money you can make compound interest. Here it is. All right. So before I get to that, what are the other things that we need to follow? All right. One is that we need an initial deposit of 1K. Second is we're gonna do 5 trades in a day, every day. All right. Now look, as I said earlier, trading is all about discipline and less about the strategy. So if you follow these strategies, the strategies that are a couple of things that I've told you, and you mix that up with this money management schedule, you will find it very, very easy, and you'll find it very, very helpful. So one is that we need 5 trades a day, all 5 days. Second is 1% risk per trade. For example, if you have $1,000 account, you risk only $10 per trade. All right. So in one day, let me rephrase. In one day, you will be risking a maximum of 5% of your account size. That is, IE stands for that is. So that is, you will be only risking $50. All right. So this is the very good idea. See, now you are only risking 1% per trade, and you are taking 5 trades a day. That means you are total risking 5%. Now 5% of $1,000 is $50. So you see, you are only risking $50. I do understand that $50 risking every day is not going to make you a lot of money. But again, as we said earlier, don't try to be millionaires overnight. Try to have a plan. Try to can try to expand it over a period of time. I've been binary trading from the past 2-3 years, and we don't try to do that. Even if I have a $10,000 account, I will still be trading only 1% of it, because we have strict rules, and this is what we will be doing. I am only taking a trade if the conditions are met. Otherwise, I'm not taking a trade at all. All right. So this having something like this, it's very, very, very important. So look, now what's the worst that can happen? The worst that can happen is that you can lose all $50 in a day. But think about it. Even if you have had a very bad day, you still are not blowing your account. All right. So this is why I always say that at least 500 is good enough, but the best one is $1,000 deposit. It gives you, one is you don't have to worry that your account is going to be blown with every trade. That gives you a freedom of mind. In that way, you can actually choose your trades carefully, and even if you made a couple of bad trades, not a big deal. All right. So again, recap: 1% risk per trade, 5 trades a day, and only risking $50 a day. All right. What's the next bit? Target is to win at least 15 trades a week. Now, why is this? See, now total trades in a week gives you what? Total trades in a week is 5 times 5, because we are taking 5 trades every day for 5 working days. That gives you 25 trades, right? And then you have the target is to win 15 wins. That is 15 divided by 25 times 100 gives you what? I'll let you do the maths. Anyone? Any idea? Let's bring a calculator down. So 15 divides by 25 into 100. Exactly, that's your 60% win rate. I see on an average 70% return. Even if you win 15 out of every 25 trades, you will still be making money, as I said earlier. So again, this is the target. This is something that gives you that particular 60% win rate. Now, say that we are doing 1% return. Now, this is why I started off with the 250. Again, 250. Now you're only growing to 1% every 250 times. So that becomes 250 times a year and only 1%. Let's see what happens by the end of the year. Now 11,000, not a very big number, but you over a period of 1 year, you've multiplied your $1,000 almost 11 times. And trust me, 1% is a very minimum number. All right. Now, what happens if it goes wrong? Sorry, a few more points. One is try to trade longer term trades and refrain from turbo trades or you called short-term trades. All right. So this is very important. All right. So if you are trading new, for example, look, 1-minute trades, they tend to play with your emotions a lot. By the time you realize that you've already taken 20 trades in a day, it is going to be too late, because 1 minute they give you an opportunity every now and then. You have no idea how many accounts I blew when I started out just trading one minute trades, because they seem they're very easy, but they require a very strong mindset. And honestly, I'm not that strong. I do tend to slip on my emotions every now and then, and that happens. The idea is if you trade on a higher time frame, if you trade on turbos, it becomes a lot easier, and it also becomes a lot easier to control your emotions and not get carried away by 1 minute, that fantasy, that all that excitement which just occurs in those 60 seconds. You will see your adrenaline pumping when you are in that 1 minute trade. It will be much easier, and it will be much easier to do it if you end up doing a turbo or a longer term trade, because you will also have it gives you time to think. That's most important. It gives you time to think. It doesn't get you into that rush, and that rush makes you ends up you making bad decisions. All right. So again, longer term trades, and again, at the end of the day, it's all about discipline, discipline, discipline. It's all about discipline. If I say that I'm going to take 5 trades a day, that means I am going to take 5 trades a day. What else you can do is set a particular trading time. For example, what I do is, depending on my schedule, so I'll be like, all right, these 2 days I am just going to trade on in London session. These 2 days I'm going to trade on New York session, and these 2 days I'm going to trade in Asian session. Depending on wherever you are, what time frame suits you, or you're gonna say, all right, I'm gonna trade 9 p.m. my time, or I'm gonna trade 6 p.m. my time. Make it as a schedule. Just like you do anything else in your life, if you go to your daily jobs, you go to your offices and all that, you say, I'm going to be there by 9:30, I'm going to be there by 9 a.m., and I'm going to get out of there by 5 p.m. After that, I'm going to come home, I'm going to do my trading from 8 to 9 p.m. I may get 2 trades, I may get 5 trades, but the thing is, I am maximum going to do 5 trades. And if I don't find a trade, if I don't find an opportunity, I'm not going to trade. Simple. This is all you got to do. It's very, very important. All right. So again, it's all about discipline. So what else do we have in today's webinar? Now you see, I've already shown you that the win rate required is 60% or even 56%. BullBinary easily pays 70% or even 75, even 80% at times. So this is a very, very good place to start. 5% trades in a day, 1% risk per trade, and if you have a $1,000 account, $10 per trade. One day you will be risking a maximum of 5% of your account size. You will be only risking $50. Target is to win at least 15 trades a day and 15 trades a week. And trust me, if you stick to your rules, 15% a day, it's 15% a day. 15 trades in a week is actually nothing. It's not a big deal at all. All right. Then again, grow your account by 5% every day, or even 3%. 1% is a bit low. Like I personally don't like to do 1% because if I'm only making like $10,000 a year, it's nothing. It's just like a pocket change for me. So what I try to do is I aim for 5%, but I tend to get maybe 2.5 to 3%. So again, follow that compound interest calculator thing very, very, very happy, easily. And let me actually give you a link in the chat box so you can actually use it. Or I've sent a link into the chat box. Use it and make sure you use it very smartly. Have a plan and have a trading plan. What else I like to do is have a trading journal. When I say have a trading journal, that means you should have a even what I do is I just you can even write it on a computer. For example, you take a screenshot of your everyday's trades and you say, all right, this is how much I have, $10 per trade or $20 per trade, and then you say, this is what I'm trying to do, and today I made 60%, tomorrow I'll make 70%, next day I might come down to 50%. One day I might have all 5 wins, someday you might even have all 5 losses, and it can happen. The idea is that 5% one trade, one day max, 5 trades in a day max, and that is where I am going to be done. And even if I lose 5 trades, that is fine. It's all part of the trading. I'm going to come back tomorrow. I'm going to find better opportunities, and I'm going to try and win all 5 trades again. So this process keeps going over and over and over and over again over a period of time, that your money is going to compound. It's going to multiply, and that is what we are trying to do. All right. So this was one way. This is the safest way. What else you can do? This is a bit more risky way. All right. So I'm going to just draw this so-called line thing. So now this is a bit of a risky way. It's called martingale. It requires a certain kind of mindset. It is a bit greedy-ish, but if you do it smartly, it can help you as well. For example, if you can actually combine martingaling with the previous all this method that I've told you. Martingaling is that if you lose the first trade is $10, if you lose that, the next trade is going to be $20. And if you lose that, the next trade is going to be, for example, all right, my first trade is $10, all right, which is, for example, say if it's a loss, my next trade is going to be $20. Let's say if it's a loss again, then my next trade is going to be anyone? It's going to be $10 plus $20. Let me put the plus sign. So $10 plus $20 plus again another $20. Why did I do that? One is I'm trying to recover these $30. Now you see on a 70% win rate, the only amount that gives me $35 is actually $50 trade. So if I take a $50 trade, I will be making $35 back. So it can happen. So even if you say, if I'm just going to take 5 trades in a day, and you take 5 good trades, you try to take 5 good trades, and you're like, oh, first one is a loss, and second one is a loss. No, third one, even if you win the third one, you're going to actually recover all your previous 2 losses, and you will also be done by 3 trades in the day already. And the next trade, you can start with $10 again. All right, so this is one way. It's called martingale. Martingale is that you double up your position. You don't madly double up, you just see, and you can do the calculation and the maths and have a paper written in front of you. That's what you follow every day. So again, these are the 2 methods that can be done very, very consistently. On the only key, again, I'm coming back to the key thing, that the only holy grail of consistently making money is be consistent. Be consistent in your lifestyle, be consistent in your trading. Do not jump from one method to another. As I've already shown you, try to do price action trading. Price action trading perfectly works. It's very, very important. Of course, you are not going to make every single trade that comes your way, but this is something that works, and this is something that works every damn time. So try and get this done. Try and see if this one works for you, and I'm pretty sure it will definitely give you a very, very good, win rate over a period of time. As I said, now I'm forcing on the fact over a period of time. So that means you should not do it. Don't try to do it every day. When I say don't try to do it every day, I mean don't try to overdo what you have been trying to do. All right. Don't try to say, if I do this, then I'm going to I have a $200 trade. Be very concise, be very precise. Only try and trade when your certain conditions are met. Don't over trade, and have very strict money management rules. You can screenshot this. It is going to help you a lot. In fact, I should just screenshot, and I should. We usually put our files in the BullBinary free group. So if you guys are not there, so make sure you are there. It's a free group to join, and it is going to money management. So I'm just going to upload this in our free group, and for those who are not in the free group, let me send you out a link. So we keep updating about our groups, and we keep updating about the next sessions that are gonna come. So again, I'm sending you this chat. Please do join this free group, and I'm just going to upload this. The same screenshot that we just made. So money management, yes, and it's all done. Let me post it. Done. Awesome. So make sure you check that out, and it's a free group to join, so you got nothing to pay or nothing to lose. So we'll also be keep updating you guys according to the next session or the next webinar that we are planning to do. All right. Now what do we have next for today? The next thing that I have today, I believe, as I said earlier, that I have something in stock. And that something in stock is that everyone deserves one more chance. Just like the way I told you guys that not everyone can win every trade. it is not possible. All right. So what BullBinary provides you is we provide you that one more chance in. All right. So even if you lose a trade, according to the particular deposit you made, you can actually claim back your losses by sending an email to support and send a screenshot of the particular trade that you lost, and BullBinary will definitely return your money in your account and you can trade that again. Now, this, as I said, the one more chance trades, they vary according to your deposit charging. For example, if you deposit anything between 100 to 249, you'll actually get one more chance trades. That is, if you are following the 1% rule and you do two $10 trades, or if you are martingale, you will say do one $10 and the next one $20. So you lost that $30, right? So, but again, these are limited to your trade amount. So I suggest to stick to 1%. So you do two trades of $10 and you lose all two, then you can claim back by sending an email to support, and you'll get those $20 back into your account. In the same way, the number of one more chance trades and the trade amounts increase. As I said, $1,000 is a very good deposit size. If you deposit 1,000, you actually get 10 one more chance trades of $50 each. That means at least 50% of your trading amount is already secured, right? So there's actually nothing to lose, because even if you win 50% and you get your 50% and you get $500 back of your losing trades, you are actually making money. That's like more than 80% win rate right there. So yes, so this is it. I hope everyone has been getting some information from this. One is again coming back. One key is money management. Key is strategy. Make sure that you guys follow the metrics. Make sure you guys follow price action, and make sure you guys follow strict money management. And on top of everything can be played around a bit, but something that you don't want to play around with is discipline. Be consistent, be disciplined, and trust me, with the regulated broker like BullBinary, I mean, the withdrawals are very easy. They take around 2 to 3 working days, and you get your deposit straight in your account. So that is very, that's a very plus factor. It's a regulated broker, and what I have personally noted is that the strike prices which you get on MT4s, especially TradingView. I like to use TradingView because there are a lot of tools that your normal MT4 won't provide you. So you can just add a free, it's actually a free account. If you just go to home, you can actually sign up with your Facebook. And so what you can do right now is, one is that you can join TradingView with your free Facebook account. Then you can join our BullBinary account. All right, so that is free as well. So do that, and I'll approve your request, and we'll keep you updated about the next session that I will do. I already did support resistance and trend lines setup, and people honestly loved it, because it is very easy to trade that way, and it gives you a lot more confirmation, that a lot less confusion. So then again, a few things to do. One is that you join TradingView. Second is you join our free BullBinary group. Then third thing is you use this compound interest calculator. You make up a plan for yourself, and you make sure you follow it. Then the last but not the least, and the most important one, as I said, BullBinary is a very regulated broker. So make sure you join BullBinary, and make sure you make a particular deposit, as you already get more up to 50% of your deposit secured, which is a very big deal in itself. So yes, if you have any other questions, do let me know. I am more than happy to answer. Anyone? If it is very clean and easy, that is even better. Okay, awesome. All right, so this is it for today. I hope everyone enjoyed. I hope everyone gained some knowledge and information. Again, please do join our Facebook group, and you can I'll be approving you guys, and I'll keep you guys updated about your next sessions. So till then, good luck, happy trading, trade the plan, plan the trade, and bye for now.